Welcome to Iraqi Dinar Update, your go-to source for the latest news, expert insights, and real-time developments on Iraq's currency, economy, and financial reforms. Whether you're a long-time investor or just curious about the dinar, you're in the right place. In a recent and telling development, the Association of Iraqi Private Banks has conducted a specialized workshop focusing on one of the most critical regulatory pillars in the international banking system, the internal evaluation of the capital adequacy standard. This may, at first glance, appear to be a routine step in financial sector governance, but beneath the surface, it reflects something far more significant. It speaks volumes about the trajectory of Iraq's banking sector, its alignment with global financial norms, and its preparation for full integration into the international financial system. For those watching Iraq's economic evolution closely, this initiative is more than just a technical compliance exercise. It is a signal, a beacon, that Iraq is preparing to cast off the final remnants of financial isolation and step confidently into a new era of monetary and banking independence. To begin, let's examine the content and context of such a workshop. Capital adequacy refers to a bank's ability to absorb losses while maintaining sufficient capital reserves to protect depositors and the overall financial system. It is not just a recommendation, it is a core requirement of the Basel Accords, a set of international banking regulations developed by the Basel Committee on Banking Supervision. These accords, which include Basel I, II, and III, are the global standard for how banks should manage risk, capital, and liquidity. Each country that wishes to participate in the international financial system must align its banking sector with these accords, or risk being excluded from global banking networks, including correspondent banking relationships, international investment flows, and financial trustworthiness. That Iraq's Association of Private Banks is organizing such a workshop means that the Central Bank of Iraq, CBI, is sending a very strong message to the country's financial institutions. Prepare yourselves to meet international standards. This isn't optional. This is the path forward. The banks must align themselves with Basel requirements on internal evaluations, risk-weighted assets, Tier 1 and Tier 2 capital classifications, stress testing, and other critical metrics that determine how much capital a bank must hold in reserve in relation to the risks it takes on through lending and investment activities. What makes this particularly noteworthy is that the focus is not just on teaching the basic principles of capital adequacy. Rather, the emphasis is on the internal evaluation of capital adequacy, meaning that Iraqi banks must now adopt internal processes for assessing, managing, and reporting capital risk. This is a significant step. Internal evaluations are a core part of the Basel II and III frameworks and require banks to develop sophisticated risk models, maintain comprehensive documentation, and subject themselves to periodic regulatory review. All of this converges on one core insight. Iraq is preparing to remove the last vestiges of financial isolation. This is not speculative. This is evidenced by policy, training, infrastructure upgrades, and international collaboration. Iraq is aligning itself with the IMF, engaging in Article 4 consultations, expanding foreign reserves, buying gold as a buffer for currency stability, and now, importantly, ensuring that its banks meet capital adequacy standards on par with any advanced economy. You do not do this unless you are preparing to operate without restrictions. Why is this so important for investors, observers, and Iraqi citizens? Because an internationally compliant banking sector is the backbone of currency revaluation, international trade expansion, and long-term economic growth. A currency cannot float freely and establish a real market-driven exchange rate unless the institutions supporting it are transparent, capitalized, and integrated into global standards. Iraq's current steps indicate that the era of a restricted dinar, heavily reliant on the US dollar for external trade, is nearing an end. Once banks are Basel compliant and able to manage risks, Iraq will have both the legal and financial infrastructure to issue an internationally tradable currency. This would allow the dinar to be freely exchanged across borders, reflect the true value of Iraq's natural resources and economic potential, and allow Iraqi citizens and businesses to participate more fully in global markets. Furthermore, this transformation has geopolitical ramifications. Iraq is situated at the crossroads of the Middle East, rich in oil, gas, minerals, and agricultural potential. Its stability and integration into the global financial system are crucial not just for regional development, but for global energy security. As Iraq opens its banking sector, the door is open to massive foreign direct investment, multinational infrastructure projects, and the creation of financial hubs that can service the wider region. None of this is possible without the foundational groundwork being laid today through workshops like the one recently conducted. It is also worth considering that these developments are happening at a time when Iraq is actively digitizing its payment systems, rolling out electronic platforms for banking, introducing point-of-sale systems nationwide, and encouraging citizens to open digital bank accounts. These efforts go hand in hand with Basel compliance. A modern banking system is not just regulated, it is also digitized. This dual transformation, both regulatory and technological, sets the stage for a 21st century banking ecosystem in Iraq, one that is fully aligned with the expectations of global markets and international institutions. When observers say that Iraq is about to unleash without restrictions, it is not hyperbole. The signals are everywhere, and they are intensifying. From monetary policy reforms to fiscal transparency laws, from trade liberalization to currency protection measures, Iraq is wrapping up the final chapter of its financial transition. The workshop on capital adequacy and Basel compliance is not just a box to be checked, it is a cornerstone of a new economic foundation. It is the necessary step before opening the currency to the world. It is the signal that Iraq's central planners no longer view restrictions as sustainable. Rather, they view integration, compliance, and transparency as the pillars of their future. In conclusion, the specialized workshop conducted by the Association of Private Banks on Internal Capital Adequacy Evaluations is not an isolated event. It is a strategic move within a broader blueprint for Iraq's monetary liberation. It reflects readiness, intent, and irreversible progress toward a future where Iraq is no longer economically confined by outdated systems, but rather empowered by international engagement. The banks are being prepared. The regulators are leading. The system is transforming. And the world is watching. The return of Iraq to the international financial community is no longer a question of if, but when, and by all indicators, that moment is approaching rapidly. Thanks for tuning into Iraqi Dinar Update. If you found this content helpful, be sure to like, subscribe, and hit the notification bell so you never miss a beat on Iraq's evolving financial landscape. Stay informed, and stay ready.